Good afternoon. I'm Jill Malandrino, business correspondent for the Voice of America, and this is filmed live at the NASDAQ market site in Times Square for the Africa Investor Investment Summit. Hubert, it's so great to have you back in studio with us. And for this particular panel, we're going to talk about the role of long-term in sustainable African development. So what I'd like to do is go down the line and hear a little bit more about you and which company you represent.
Okay, well, I'm glad to be here again.
Thank you.
And hi, viewers. My name is Hubert Denso. I'm the CEO of an organization called Africa Investor, who's hosting the forum here today. We're a platform for institutional investors from across the continent. And we also host the African Sovereign Wealth and Pension Fund Leaders Forum, which is a group of the leading and the largest institutional investors, pension and sovereign funds, with a commitment to invest across the continent.
All right, well, thank you. Duncan, we'll move on to you.
My name is Duncan Bonfield. I'm the Chief Executive of the International Forum of Sovereign Wealth Funds. We're a collection of the world's leading sovereign wealth funds. We've got about 35 members representing trillions in investment, and we've got 6 African members. So we've got Libya, Morocco, Nigeria, Rwanda, Angola, and Botswana. So they're all African members.
All right, well, thank you for being with us today. And Lionel will wrap it up with you.
Thank you. I'm glad to be with you. I'm Lionel Johnson, the president of the Pacific Pension and Investment Institute, PPI, headquartered in San Francisco, and we are a membership organization of institutional investors as well, pension funds, sovereign wealth funds, endowments, and foundations that focus on the power of investment in the Pacific Rim. But our members are global investors, and so they have a great deal of interest in Africa as well.
Let's talk about some of the trends that you're seeing in terms of long-term investment, because last year's theme was from aid to trade to institutional investment. We're there now.
Yes. No, we're absolutely there. I think the message was well received, and President Obama at the time hosted a very big push through Power Africa that really sort of awoke the consciousness with the long-term institutional investors in the US. I think on the continent, a lot of the issues have surrounded the global institutional investors saying, well, before we allocate our capital to the market and from our retirees or our future generations, show us a little bit about the role that you're taking and how you're allocating capital. So right now, the institutional investors and the asset owners on the continent are really looking to increase their allocations. This morning, there was a very specific initiative that was launched, which is called the 5% Agenda, which focused on all of the institutional investors and asset owners, pension and sovereign funds and insurance companies, allocating up to 5% to infrastructure to address the continent's $90 billion per annum infrastructure deficit.
All right. So, Duncan, what are you hearing from the pension fund side? What trends?
Well, the sovereign wealth fund side, let me just give you a couple of numbers just to help. So 2016, sovereign wealth funds invested about $60 billion in direct investments. Of that, $12 billion in infrastructure, with around $4.5 billion in utilities. But then looking at the allocation from markets point of view, there was 45% in emerging markets. Now that's of the whole party, includes public markets as well, but only 1% in frontier markets. Now that has moved away from developing markets towards emerging markets, but those frontier markets still not attracting a huge amount of capital.
Right. And so, Lionel, more appropriately for you, what are the pension funds? What's the trends in terms of long-term investment?
Well, we recently conducted a survey of our membership to try to determine just what their allocation strategies might be over the next couple of years, particularly with respect to Africa. And I was actually very gratified to know that we have between 1 to 5% of our membership, of our members have 1 to 5% of their allocations going to investments in Africa across various asset classes. So I think what we are seeing is an increasing amount of attention being paid to the continent as we look at these opportunities in various areas. Infrastructure, as Hubert says, is one of those areas of great interest.
That seems to be the largest area of infrastructure, and rightfully so, not only from the brick and mortar perspective, but also technology as well.
That's right.
I think it's interesting that the continent is making a big push to move away from commodity dependency. Now I would imagine that is what's making longer-term investment more attractive, because you could argue that Africa could lead the way in terms of green tech, agribusiness. They're certainly leading the way with mobile payments.
Exactly.
So I think there's a tremendous opportunity there.
No, absolutely. I think, the continent, because it comes from a low base in so many different areas, it's ripe for innovation, and we're seeing that right across the board from on logistics and warehousing and some of the other agribusiness related industries. So we heard from one of our colleagues this morning who's a sovereign wealth fund. He said, 12 months ago he wouldn't have touched agribusiness, but now it's his number one, fix in his asset allocation and his portfolio. So there's a lot of opportunity there, but I think the key thing that we're noticing is that the way that the sovereign fund community and the institutional investment community are really having to reinvent their business models, not only just to be allocators of capital, but really project developers in some case, almost the face of investing into the particular country, and in some respects actually running and investing in the companies that are actually operating and maintaining some of these assets.
Are there particular regions that are more attractive than others?
Well, probably, I mean, Western Africa is certainly an attractive region. Nigeria is obviously an economic powerhouse, but if you put in some of the other countries there, you're talking of a market of 400 million. You've got a young population. You've got a good deal of big urban centres. All of those are rife for development. So that's where the growth is going to come from, those young population who are also looking for those technologies that others have as well. So there's real potential there. And obviously Southern Africa has long been the powerhouse, if you like, of Africa.
But it almost seems a little bit more mature than, let's say, the Eastern region, where we're seeing some significant investment there as well, and you're starting to see how infrastructure is working between transcontinental infrastructure and how you could see it in trade numbers and even with the airlines increasing capacity and so forth, because it's really becoming a major hub. But let's talk about U.S. institutional investment. What we hear a lot from viewers with Voice America, they're concerned that there's not much policy around it right now. We haven't heard too much about that. From the institutional side, is that an issue, or do you think we'll continue to see investment coming from U.S. institutions?
Yeah, I think we will. I think I take your point on there is a lack of positive policy from the US, right. But that doesn't mean that that there's necessarily any huge change from previously. But I think if you look away from there, Africa, and for Africa to thrive and to attract American investment, it's got to have some dynamics, some market dynamics, some basic attractiveness to institutional investors that are irrespective of government policy. So that's the real key to it, I think. So yes, it is a drawback not having that positive policy, but you're still seeing investment going into Africa because of some of the fundamentals.
Right, and infrastructure improvement is certainly one of them. And there are corruption is always one thing that does come up, but it seems as if through the elections and so forth, I have not heard as much about it on a granular level as opposed to years past, because I think the continent's starting to recognize that this direct investment is ultimately benefiting them.
Well, I'm sorry to say, but I'm going to jump in on that. I think a couple of interesting points. We heard already this morning the market. The market is the great way to get around corruption because it's transparent, because that's the power, one of the powers of market. So the more the market's liberalised, the better. It makes it better for institutional investors. But I think the second point that you make about that is you are seeing overall a liberalisation. You're seeing more democracy coming into Africa, and that all helps along with transparency that is brought along by the likes of mobile technology. All of those forces are acting together to improve the visibility and the transparency in markets.
Right. Would you agree as well from a pension fund perspective?
I would agree. I think it's important also to remember that Africa is a vast continent with multiple economies, and I think people who look at Africa have to appreciate the diversity of the opportunities as well. We find that one of the more exciting areas, in addition to increasing connectivity in a digital sense, is the creation and development of a consumer class in the continent, which is very, very exciting and offers a number of opportunities. This morning there was an announcement about Actis's major investment in Cameroon, in a huge development of a consumer shopping mall that has many, many opportunities for job creation and a real demonstration effect, if you will, of the power of consumerism in an African economy. So our investors are going to be looking for those kinds of opportunities, as well as the brick and mortar traditional infrastructure investments, which are enormously important for development on the continent.
Right. It's really interesting because here in the States, it's almost the Amazon effect has impacted brick and mortar.
Right.
But I've noticed on the continent, you're starting to see more of these super malls being built for that reason alone, right?
No, absolutely. I mean, you're seeing some of the first acorn companies on the continent now reaching $1 billion in terms of valuation. The likes of Jumia, so a lot of the telcos are really getting behind a number of these private sector players. But also, when you talk about transparency, I think as Duncan was saying, we heard from some of our friends this morning that the market is beginning to correct itself. So when you look at the way that a lot of the institutional investors allocate, I mean, it's very few of them that can actually do direct investing. So a number of them actually have to go through, fund managers and investment managers. So you found that on the continent, there's been, a dearth of good communications that have come out that can talk to the levels of governance in the investment management industry. And that's rapidly beginning to change now with fiduciary ratings on investment managers that are sort of, drawing into world-class criteria for manager selection. And it's these little things that are actually empowering and giving some transparency to assist institutional investors to be able to allocate independent of a government policy that might influence, what a government institution might be able to provide as a grant or a subsidy, but the market is really driving things in the continent. I think that's a very positive sign.
Right. It's really interesting because it feels like we went from aid to trade to institutional investment. I feel like this year the theme seems to be transparency, and that's what's really going to lead the way. So let's wrap it up with your individual outlooks. What do you see in the next 5 to 10 years? Do you think we'll stay on this trajectory of investment?
Well, I think you're going to see a lot more domestic investors being, playing a real catalytic role. I think you're going to see a lot more diversification across sectors because, as with most things, once you prove a model in a certain sector, it then gets replicated and used across a number of others. And I think historically, there's been a bit of a divide between the public and the private sector for political reasons. But I think now, because of the global economy, the likes of a Basel III, the way that the G20 are beginning to look at the issue of mobilizing institutional investment for long-term assets, I think there's an opportunity for the private sector to play a leadership role. I think it's ready for that, and I think we're beginning to see that really taking set from the local investors.
All right, and Duncan, I'll ask the same question of you.
Yeah, I think you'll see. I agree with the overall direction of travel. It will, but also, as Lionel says, this is a continent of very different nation states, and so you will see multi-speeds in terms of that. But I think the overall trend, because of the basic dynamics of population growth, and urbanisation, are going to be very positive. So you're going to see more investment, undoubtedly. I think sovereigns may be a little bit slower, the big ones traditionally, because they're more traditional. They're perhaps more conservative. But overall, I think you'll see Africa as really as a growth centre and attracting more and more investment.
All right, and we'll wrap it up with you.
Well, I think as they look to the next 5, 10, 15 years, Africa is going to be an increasingly important destination for investment. If you think about today's economy on a global basis, it represents the second largest grouping of economies in the world that are opportunities for investment after East Asia. And so we will be looking to continue to play a role in connecting our investors with the opportunities on the continent and helping them understand them, appreciate them more. They are investors that are really focused on making their investments for the long term have an impact on development on the continent, which I think is important not only in their own institutions and for their constituencies, but for action on the ground and to make those investments supportive of the development process of the continent. So in that respect, I think we're looking for a very positive trajectory of continued interest in Africa and with investments following that interest.
All right, well, thank you very much. Look forward to continuing this conversation in 2018. And as always, thank you for watching. I'm Jill Malandrino, business correspondent with the Voice of America.